Hello traders, welcome back. This presentation is for the 18th of September 2015. This is for the Master Trader. It's for the Master Trader course, and what I'm going to cover today is a little exercise to test your skills. Okay, so with this exercise you'll be able to see how much you know and how much you don't know. Okay, so it's going to be very helpful because the thing is that we're always covering the same topics over and over again. So I'm just trying to I'm just trying to be a bit more I'm trying to improvise and kind of like get a bit more bit of an inspiration as well to see what other things I can do and I can tell you. So this is going to be a pretty fun exercise that you guys enjoy it. So there we go. Right, so let's just crack on straight away. Let's go on to the where is it going? The Aussie versus dollar. Here we go. So what I'd like you to do, okay, because you guys are going to be doing this, so what I'd like you to do is to make sure you see at least, let's have a look, call it 9 months, okay, from January all the way down to September. So what I'd like you to do at this stage, obviously that now that you guys are master traders, is to analyze this market and then see how much you know about this and what things you can do with these. Because once you know how to read a chart, you'll be able to. It's gonna tell you a story, okay? It's gonna tell you. You can even write a book out of it, out of this chart here in front of us, without even scrolling back. So it's gonna tell you a lot of things. So I want you guys to go through it, put all the lines you want, go through everything you want without changing the scale. So it's just literally here in front of us. And then see what you can spot, and then see what points you usually go through on your checklist, for example, and then see what you come up with. Okay, so now just please pause the video for whatever time you need, 5 minutes, 10 minutes, 20 minutes, whatever you need, and then pause it back again. Okay, so I'm just gonna carry on, but I'm expecting you guys to pause it and then to carry on, and then we just take it from there. Okay, so I hope you guys have finished, and I'm gonna guide you through myself, and then you'll be able to see whether we are both in agreement, whether we've been looking at the same thing or not. There are so many different things on this particular one that you'll be surprised. You might get 2, 3, 4, 5 or 6 things right. You might miss out on a few. So this exercise will help you to understand the whole thing moving forward. So I'm gonna just start with it. So this is a downtrend. So this is a downtrend. A downtrend here, giving lower highs and lower lows. Okay, let's just go through it. This is so in the downtrend, this will be the phase 1 going down, phase 2, phase 1, phase 2, phase 1, phase 2. You can put a zigzag indicator if you wish to do so, but at this stage, as a master trader, you shouldn't use the zigzag. Okay, you should already know by heart. Okay, I'm gonna do it again. Phase 1, phase 2 up to this point, phase 1 all the way down to here, phase 2 up to here, phase 1 all the way down to here, phase 2 up to here. Okay, and then phase 1 down to here somewhere, then phase 2, then phase 1, then phase 2, and so on and so on and so on. Cool. If you guys got the phases right, well done. Okay, let's carry on. So that's the phase 1 and phase 2. Now let's look at the cycles. So this is giving lower highs and lower lows, hence the downtrend, hence the EMAs pointing down. Whichever EMAs, doesn't matter. Okay. Here in this moment in time, I have the 20, the 50, and the 200 moving average. You might have the 8 and 20. Okay, doesn't matter. Okay, so there is a downtrend giving lower highs and lower lows, and yep, let's move on to the next point on the checklist. Let's look at the price action. What you guys came up with on the price action? Let's have a look. So if you guys said that there is a high test bar here, okay, you did well. If you guys said that there were 2 high test bars up here on the turning point, you were absolutely spot on. Okay, so there is a high test bar here, and there is a high test bar on the next day. Okay, the color doesn't matter, the size doesn't matter. We're just looking at the shape of the individual bars to see what price action is telling you. So yes, high test bar and a high test bar, and as you probably know by now, high test bar tells you that the market is going to be going down. Okay, high test bar is for a sell. Okay, and there are 2 high test bars. Cool. Next point. Let's have a look at the EMAs. Yeah, they're all aligned nicely. 20, 15, 200, all aligned quite nicely. That's the 50 moving average. So the price action, or the price in general, is bouncing off the 50 moving average, and it's acting as a level of resistance. Okay, let's move on going forward. Next one. Let's start with the lines. I call them lines, and as in trend lines and support and resistance, which are horizontal lines at the end of it. So let's have a look. We need minimum 3 touches for it to be qualified. So this guy goes here. So we have 1, 2, and 3 touches. Okay, so it is qualified. We have 3 touches, so the line is qualified, which means we can draw it and we can keep it there. Now what we need is to hold the control key down, do left click, push it down, and voila, there we go. Now we got the channel. Beautiful. So now we have a channel pushing down. Okay, now fine, you got the lines right, channel, great. Okay, if you didn't, now you know from now on. Next one, the selling zone. Here we go. This is known as the selling zone. Hence the name. That's the area that you're looking to sell. So you're looking to sell at the end of the phase 2 and at the beginning of the phase 1, always, whether you're looking to buy or whether you're looking to sell. So here, that'll be the area to sell, here is the area to sell, and here is the area to sell. Great, you got the 20% selling zone. Well done for that. Next one, let's move forward. Continue with the lines. Now we're on to support and resistance. There we go. So here, this section here is acting as a level of support. So you have one leg here and another leg there. So this is testing the lows. This is the floor. Testing, testing, testing. It's not breaking through. Pulls back. It gives another leg. Then it pulls back again, and then eventually break through, and it becomes resistance. So the level of support, which has now been broken, has now become resistance. Okay. In other words, the floor of the house has become the ceiling. Okay, and it's all matching up there nicely. So what else we have? Cool, let's carry on. Cool, the stochastics, for example. For those of you who got this one right, well done. In the stochastics, here we go, the stochastics indicator, this section up here is telling you that the market is overbought, meaning there are way too many buyers in the market. Now we need some sellers. If you look carefully, when it's up here it reverses, up here reverses, up here reverses, up here reverses, up here reverses, down here reverses. There we Look at that. Let me just tell you exactly. Look. Up here, reverses, goes down. Up here, reverses, goes down. Up here, reverses, goes down. Up here, it's already reversing. We'll get into this section in a minute in more detail. Down here, reverses, goes up. Then it crashes down. Now, here's the problem. When it is pushing down like that, and it keeps on going, dropping and dropping, the stochastic indicator by nature won't be able to go any lower, and the reason being is because it's locked from 0 to 100. So all it's going to do is just going to stay flat at the bottom until eventually turns. It happens very rarely. It's not very common. As you can see, out of 1, 2, 3, 4, 5, 6, 7 times only happened once in this section here. So, yeah, so it is not very common. However, it does happen. Okay, so just that's why you need to train your eyes, and that's what I'm showing you, how to read the charts, how to interpret the market correctly. Cool. Let's carry on. Cool. Next one. Reward to risk ratio. See how many points we're going through? Loads of points. Here we go. Reward to risk ratio. The entry is here. Okay, entry was here on this day on the red seller bar. Sorry, high test bar. Excuse me there. High test bar here. Entries just below the low of the bar. Stop loss just above the high of the bar. Didn't trigger it. You place it again on the next day. Entry, stop loss. So that's the risk. So from the entry all the way down to here, it's like a 3-to-1 reward to risk ratio, and that's an amazing selling opportunity here. It triggered on the next day, and now it's currently pushing down in the direction of the trend, in the direction of the whole force back into phase 1 again. Okay, so yeah, what you should do, this is an example that should be printed on the manual, it's a textbook example. So what you should do is to print it out and put it on your desk or on your wall, and this is a perfect example for an amazing selling opportunity regardless of the outcome. Even if it didn't trigger, even if it triggered and it bumped up to past the screen even, it doesn't matter. The trade was as equally as qualified whether it wins or whether it loses. Okay, so I hope you guys enjoyed that. Trade your plan, stick to your plan, stick to your checklist, and I hope this has helped you spotting trades and focusing on quality over quantity. Thank you very much for listening, and I'll catch you all very soon.